Good day and welcome to another Mr. James Accounting tutorial. Today we'll be looking at Accounting Unit 2, Paper 2 of 2022, Module 3. And I would like to remind you also, if you have not yet subscribed for the channel, please do so. And remind you again to look at the advertisement. It takes about 10 seconds of your time at most, and this is how the channel would remain free of charge to you. So let's get right into it. Part E. Lagoon Limited manufactures two products, incurring a total fixed cost of $1,300,000 and has its disposal total machine hours of 40,000 hours. The prevailing tax rate is 30%. The following data relates to both products. Okay, and we are given product A and product B in a table. Various things. So let's take a look at the table itself. We have the demand for the products in units, 15,000 for product A and 12,000 for product 500 for product B. We are given the selling price, the variable cost, and the contribution per margin. Now you get the contribution for margin contribution by taking the selling price and minusing the variable cost. You will get so 800 minus 350 gives us 450. 450 minus 150 gives us 300. Okay? And the number of machine hours required per unit is 5 for product A and product B is 2. Okay, we are required state two assumptions of break-even analysis. We'll look at that first. Two assumptions of break-even analysis. I've given you three here. All the elements of course can be divided into fixed and variable costs. The fixed cost remains fixed or constant during the relevant range, and the cost curves are linear. Okay, so here you have the three main assumptions of break-even analysis. Okay, part 2 says using limiting factor analysis, calculate the optimum total contribution margin for Lagoon Limited. Show all your workings. Right. Now, limited factor analysis means one of the factors at the production here. We're only given one, so this has to be the limited factor. Machine hours, 5 for product A, and B, 2 hours. So these are the limited factors. Okay, let's take a look at the workings. First, we find the contribution per limited factor by dividing the contribution taken from the table by the limited factor. Okay, for product A, it's 450 divided by 5, we get $90, and for product B, it's 300 divided by 2, and we will get 150. Now we rank these 90 and the 50 in order which one is highest first. So we will produce product B first and product A second, if there is any limited factor remaining. Okay, so we produce product B first, and if there are any machine hours remaining, then we will produce product A. So we're using the $90 and the $50 only to find out who or which product to produce first. After that, we won't really be using the 150 or the 90 again, right? Product B will be produced first, and then the remaining machine hours will be devoted to product A. This will give the optimum total contribution margin. So let's see what the answer would look like. Our answer, product B, machine hours would take, if we produce the entire 12,500 units by 2 hours, would give us 25,000 hours. And then product B would take up the remainder of the 40,000, which would be, sorry, product A will take up the remainder of the 40,000 hours. That would be 15,000 hours. So product A will produce 15,000 divided by the 5 would give us 3,000 units. So our production schedule would be made up of 12,500 units of product B, and then afterwards we'll produce 3,000 units of product A, and that will make up our 40,000 limited hours. The optimum contribution would be product B 12,500 by 300. That's the contribution from product B. Notice that we didn't put the 150 here, but the 300, right? And we'll get 3,750,000. Product A would be 3,000 units that we calculated here, multiplied by the contribution of 1,350, and we'll get a total of $5 million. Okay, so that takes care of part A. Part B asks us to state two functions of the budget committee within an organization. 1 mark, just have to state them, you don't have to explain them. And this I have given you here 8 functions. 1, to lay down general policies of management in relation to budgetary system. 2, to lay down the various guidelines for the preparation and implementation of the budget. To provide historical data to help managers in forecasting. To help in the preparation of various functional budgets. This would be like the cash budget, sales budget, those type of thing. And number 5, to assemble the budget figures and to see that everyone submits his figures on time. To scrutinize budgets, to suggest lines of revision and amendments if needed in the submitted budgets, and to accord on final approval the budget. Okay, so these are the things that the budget committee would do. That is their function. Okay, let's take a look at what part C would require. Okay, part C, we'll read what is required first, and then we'll go through the length of the data. Okay, prepare the cash collections budget or schedule. Prepare the cash disbursement schedule for purchases, and then prepare a cash budget. After we finish the cash collections schedule and the cash disbursement schedule for purchases, usually the cash budget is a very short affair to produce. Okay, so let's see what the rest of the data look like. Lagoon Limited has provided the following information from October 2019 to February 2020, and we are given a table here with the sales, purchases and expenses for October, November, December, January and February. Now if we looking at this, we will notice we have expenses only for January and February. Therefore, the cash budget that they are asking us for could only be for January and February. Okay, we are also told afterwards that the budgeted cash balance at 31st December 2019 is $75,000. So this is your opening balance at the beginning of January, and there are no outstanding borrowings. So this is a company that will be borrowing money whenever they have a shortfall in cash from here. The company's policy is to keep a minimum cash balance of 70,000 at all times. Okay, so you're gonna have a minimum amount of 70,000 at all times, even if you have to borrow to get that 70,000. 60% of sales are on a cash basis, and the remaining 40% are credit sales or accounts receivable, and they are collected the month after the sales. 40% of purchases is on a cash basis. The remaining amounts are credit purchases, which are paid as follows: 1/3 the month after purchase, and 1/3 2 months after purchase, and the balance 3 months after. Okay, a little bit of rocket science would tell us that the balance is also 1/3, right? Expenses are paid in the month incurred. In January, the company will purchase equipment for 450,000, and a shortfall in cash in any month will be covered by borrowing from a financial institution at a rate of 12% per annum on a reducing balance basis. Principal and interest are paid in the month when there is excess cash. Borrowings take place at the beginning of the month, and principal and interest are paid at the end of the month in full or part when there is excess cash. Now this is a bit vague. It doesn't precisely tell you which month the payment of the principal and the interest takes place in. Okay, we know the borrowing take place at the beginning of the month. Right, so let's get into the answer. Okay, the cash collection schedule, Lagoon Limited. Make sure you have it properly headed up, and we can show the schedule from October to February. Alright, now it is quite possible to do the workings within the table itself, but if you are not unsure of which format to use it, this is a quite simple format that I have here. You put the sales at the beginning in the first line, and you rule it off, so you are not going to use this to add it on to anything that comes underneath. Okay, your cash sales is 60% of the sales, obviously, and your accounts receivable is 40% collected the next month. So how to read this table? The 600,000 in sales is collected 60% in cash and 40% here the next month. So the 360 and the 240 will make this 600,000. The 700,000 is 420 cash sales at 60%, and 280 here the following month in 40%. So When we add these two together, we'll get back our 700,000. Same thing follows for the 800,000, 775 and the 850. Okay, it follows that our accounts receivable at the end of February should be 40% of the 850 here, right? So when we add this table down, we'll get that this is how much cash we will collect in October, November, December, January, February from our sales. And this total is a control. Make sure the table balances. Once it balances, this column balances, we know that the figures are accurate. Okay, so when we add 360, 660, 760, 785, and 820,000, we should get this figure here. When we add this and this, we should also get this here. Okay, so that's your cash collection schedule. This is what will go into your cash budget, focusing on January and February here. Let's take a look. Okay, we have the cash disbursement for purchases schedule. Right, again, the period is the same as this for the sales, and we put in the total purchases at the top. We take the same procedures, and then we fill in the details underneath. 40% would be cash. That would take place in the same month. So this would 80,000 would be 40% of 200,000. 112 is 40% of 280, and 140 is 40% of 350, and so on. Going down there, we add the total. The first cycle is 1/3 of the balance. We do not include the 80 in the balance because that was it's not necessary to pay that because we already paid when we bought the goods. So it will be 1/3 of the remaining 120,000, right, which is paid the following month. So 1/3 of 120 is 40,000, and then 1/3 the next month of the 120,000 is 40,000 would be in December, and then the next 40,000 in January. Okay, same applies to the 280,000. We take off the 112,000 and we'll get 168,000, and 1/3 of it is 56 paid for the next month. 56 again paid for the next month, and the balance is also 56,000 is paid here. So if we add the 56, 56, 56 and 112 here, we will get 280,000 here. Our accounts payable for November, or cash purchases for November. We do the same with the 350, 40% for cash services, and then the following month 1/3 of the balance. The balance is 210,000, so we'll get 70,000 here, 70,000, and we don't have to do March, otherwise in March we'd have a 70,000 here. Okay, same for January and February, and let's see what the next part of the question will look like. Okay, for the cash budget, we will prepare a schedule that looks something like this. Okay, the important part of this here is this section here. Right, and like we said, the budget will be for January and February because those are the only 2 months that we have all the figures for. Right, we will fill in all these figures here from the data that was given, as well as from those that we prepared the schedules for. Put in the purchase of equipment in January, and then when we add these down, we'll get this total here. The total cash receipts from the cash collection schedules is taken, and we minus the total payments here. We'll get the net receipt or payments here. As we can see, 966 is greater than 755, and therefore we might have to do some borrowing here. Interest on the borrowing, and then the payment of the principal comes next in the schedule, and we fill that out as we go along. So let's see how we go about doing that. Okay, this is what your answer should look like. We'll go through it beginning where we left off from the other slide. First, the net receipts payments is calculated here, and we will get $181,000. But this is a shortfall in cash, so we need to make it up from somewhere. The balance brought forward from previous month in December, we are told us 75,000, so that would reduce the deficit here a bit, and we will need to borrow 176,000 if we had to have a minimum balance of 70,000 to carry forward to the next month. Okay, so how we got the 176? We take the 181 and we minus it from the 75. 181,000, we add on the 75. So remember, this is a negative figure, and then we add the 70,000 that we need to carry forward into the next month. We get 176,000. Okay, so we were going to need to borrow $176,000 for the next month, and that will allow us to carry forward the 70,000 here. This 70,000 comes over here as balance brought forward in the next month. For February, we calculate the net receipts payments again, 820 and 654. This gives us a overage of 160,000. So when we add that with 70,000 that was brought forward, we will have more than enough to pay back the 176 that we borrowed here, right? So we will pay back the 1760 here in interest. We get that interest by taking the 176,000 that we borrowed at 12%, and whenever we divide it by 12 to get 1 month, we get 1760 in interest. That and the 176,000 will pay off, and then we need a minimum balance of 70,000 to carry forward to the March. When we add those up together, we'll come up with an amount of 11,760 that we need to borrow again for the next month. Okay, this is our control total. We add them up. Make sure that the balance brought forward here in this total is 75,000, not 70,000, because this is not March, but this is from the beginning of the period to the end of the period. Okay, and the balance carry forward. That you can add these figures across, and that would bring us to the end of this question. And we hope you have benefited from the slides, and if so, We would like you to give it the thumbs up and look forward to see you in the next video.